let me quickly bring on board Sumit Gupta, research analyst at Centrum Broking, tracks healthcare. And that's something that we're trying to kind of gauge and track better. Sumit, let me start off by asking you, what are trends which are currently playing out? How is pricing playing out? Do you expect pricing and value-added products to be the core now for healthcare going forward?
Yeah, thank you for having me on the show first. So regarding the pricing, let's say, so within the hospitals category, if you see, there will be a lot of competition that we expect going forward, let's say in the Delhi NCR market or in the South, the kind of expansion that is going on. Obviously, there might be some pricing issue. However, we see the volumes continuing, like in the near term also, there might be some pressure on the volumes, but going over the like medium to long term, we are positive on the space. Be it in terms of diagnostic sector, obviously the incumbents have regained their pricing power. So if you see over the last 2.5 years, the margins have increased, led by majorly volumes as well as some bit of pricing power that they have got back.
Sumit, Varsha here. Welcome to the show. So a lot of PE investors and VC investors are actually, interested in healthcare when it comes to hospitals, especially in hospitals and health tech startup. Now, what are the factors that is driving these investments into hospitals?
Yeah, hi Varsha. So regarding the PE or VC investment that has been going on for the last couple of years, post-COVID majorly, the key drivers are that there is a lot of scope in the healthcare sector, and majority is going towards the hospital sector. So let's say in 2023, nearly more than 60% of the investments have gone to the hospital sector. So if you see, there's a lot of scope not only in tier 1 but also tier 2 and tier 3 cities that we have seen the majority of the PE sector going towards. Just like, let's say, care hospitals where a good PE firm is there, and some other hospital chains that we have seen. So I think it will continue going forward also, the renewed focus towards the investments in the hospital space in particular.
Right. Sumit, we are also seeing a lot of increased focus in terms of technological developments, robotic surgeries, and this comes with a lot of cost, of course. So I want to understand that, how do you see hospitals managing the cost versus the kind of ARPOB growth that they're expecting?
Right. So to increase, okay, from the starting, so if I explain, so basically the hospital sector going forward also, not only they need to expand not only in terms of geographic penetration, they also need to expand or deliver high quality services. So for that, they need to do investments in terms of providing technological expertise, just like installing high-end equipment. So that itself gives a good hospital healthcare infrastructure to a doctor also. So these kind of investments are very much necessary for a hospital to maintain the quality as well as to retain the doctors also. Because for a doctor, if the health that particular investment or machine is there in that hospital only, then it reduces the A loss and increases the productivity.
Sumit, I know we've not focused in on numbers yet and on industry growth, but I just want to cover one more piece before I move to that. We've seen plenty of consolidation happening in this space. Given that trend, you expect that to continue to play out very likely. But who do you believe is best placed at this point? Is it the larger hospitals, the bigger brands? Is it some of the smaller ones trying to get into more niche categories? How do you look at it?
So the consolidation space will likely go on, and over the next few years, I personally believe that there might be good amount of consolidation within the overall healthcare space across all the subsectors also. Let's say we diagnostic, be it hospitals or somewhat of pharma players like CDMO players. So what I personally believe is like hospital sector, we are going to see consolidation not only in tier 1 but also tier 2, tier 3 cities also. Because for a hospital, just like I treated before also, so I will. The point is about not only increasing in terms of expanding in terms of geography, but also improving the quality of services that the hospitals are giving. So that in that sense, that will increase the overall brand of the particular chain, and that will help to attract the patients and retain the patients also. So in that case, the market will increase. On the large cap versus the let's say small size hospitals, I will see large cap hospitals doing more of a consolidation, acquiring good quality small hospital chains across the length and breadth of the country.
Right. So Sumit, I also want to understand that how are you seeing, future of medical tourism as a whole? Because that is something that is picking up, and this is something that could be margin accretive for hospitals overall. So first of all, what are the trends you're seeing, and second of all, what kind of treatment or surgeries are likely to get international patients in India?
Medical tourism as an industry in India is very, very attractive. So India remains a preferred destination for the patients across the globe, majorly from developing, underdeveloped countries also. So what is happening in India, what are the key drivers are basically the kind of affordability that India provides. Let's say for an angioplasty or some heart valve replacement surgery, we are providing more than 80% discount to the global average. And we have like high quality doctors, the kind of talent that we have, that is at par with the global level. And if you see, we have a good connectivity to the majority of the countries. So like these are some of the factors which are also driving it. Going forward also, one more reason is also we have a large NRI population base. So they visit back for the treatment to get high quality services. So in that case, this particular industry is likely to grow going forward also. And I see the majority of the hospitals, let's say in Delhi NCR, that will continue to have a high volume share from this.
Sumit, a lot of companies, rather a lot of hospitals are actually expanding when it comes to specialty segment like oncology and all. Now, in your preferred list of stock, which hospitals do you see benefit a lot, because that is a margin accretive kind of segment? So in your list of stocks, what are those hospitals that would benefit a lot when it comes to specialty segments?
So within specialty, so if I talk from oncology, Max is the largest in terms of oncology. But overall, if I see incrementally, I see a small hospital chain like Artemis Medicare. We see an incremental growth going forward, like just like higher economies of scale driving the overall, expanding the overall margins. So and leading to higher returns on capital employed or on return on equity basis. So I see companies like Artemis or Yatharth Hospital, which going forward are also increasing in terms of geography and also in terms of expanding in terms of basically the beds as well as the pricing also.
Right. Sumit, we spoke with Yatharth just last week. They were guiding for a 30% growth all the way to FY30. Of course, acquisitions was one particular piece which they were, really constructive on. They were planning one acquisition every year, plus debt-free. Looking at valuations also, when I'm comparing it to peers, it's a cheaper, valuation metric at which it trades at. Just talk us through one, whether it's realistic to expect that kind of growth, a 30% on the base that they are at, and whether they can maintain margins at that kind of a base in your view.
So kind of growth that they have, or the overall geography that they operate in, basically the Noida market. So within Noida, they have Noida, Greater Noida Extension, which to my mind is a high value, high market, basically in terms of potential. Because we need, let's say for a hospital, we need to see from micro market point of view, because hospitals attract patients, let's say within a 10 to 15 kilometer range within the local market. So in that sense, there is a lot of potential which you see. One of the factor post that is basically if you see the population base in Delhi NCR, in particular in Noida, that has been increasing, and going forward it is also expected to increase. If you see the good amount of IT companies and the kind of employment generation that has been there and the kind of real estate projects that are coming there. So kind of we expect the population base to increase, and in that sense, there would be a need of high quality tertiary care and quaternary care treatment, just like Yatharth is providing there. So we see a good potential for Yatharth going forward also. And the margins, obviously, since they are expanding, they plan to add 200, 300 bed kind of acquisition per year. And moreover, there is a brownfield of 450 beds in FY27. So we see there might be some like margin, basically maintaining the margin at around 27%. However, we see EBITDA per bed growing at around 14 to 15% CAGR over the next 3 years.
Right. Sumit, I also want to understand for companies like Artemis and Aster DM, they're aiming 8% RPOB. So I want to understand that with respect to companies that are aiming lesser than 8% RPOB, what are the key differentiators here? I mean, what is the kind of strategy that these companies are adopting, to achieve that kind of RPOB?
So basically, Artemis uses the payer mix. So their payer mix is nearly 28% comes from the international patient. So that is a higher of business, like basically 1.5x of the overall average business. So in that sense, IRPOB remains a key driver. Basically, international patients remains a key driver to increase the IRPOB. However, even for let's say companies like Max or Vedanta, there might be some, let's say in the Delhi NCR market, obviously there might be some, they would be growing at around, let's say 6 to 7% kind of growth. However, the acquisitions that Max has done, let's say in Sara Hospital, Lucknow or Nagpur, so there might be some like moderation in the ARPOB. That's why we have taken, and overall there's a huge base also. So that's why we have taken like basically a normalized growth.
So, it is the saying that, you should never invest in a hospital company when they are actually going into capex. So, from your list of stocks, which are those companies who are actually not doing a greenfield capex, because that will not have a dent in their, a profit and loss statement. So, any company that you can highlight where no greenfield capex but a brownfield capex, so no dent in profit and loss.
So basically, Artemis is one of the topic. Just like so, recently they commissioned their Tower 3 facility also, which had 180 beds. So basically, they have increased their overall bed capacity. Now, going forward, as of now, they plan to expand, but considering the bed capacity that they have, I think the economies of scale would play well and will likely increase to lead to increase in margins as well as overall return ratios. And if you see majority, be it Artemis or be it Max, so these are the kind of hospitals which are majority in Brownfield. So Max is nearly 77% of the beds planned is Brownfield. So that will lead to faster break even and higher ROC.
Interesting. Sumit, just curious to know your position with regard to this entire PB FinTech saga which is playing out. They're going to aid, or rather they're going to bring all insurers together and set up probably a hospital chain or a hospital enabler to try and reduce costs in the healthcare industry. If that were to translate, do you believe that that could impact numbers overall for the healthcare space? Would it impact other hospitals as well, given the fact that maybe 40%, if I understand right, of all care which is taken in hospitals is through insurers?
Yeah, I get your point, but I think it's like in the past also there was some hospitals, just like Apollo Munich was there. So it's nothing new that hospitals and insurance providers are there. But overall, if you see, I see first of all, it's a very nascent stage as of now for this particular plan. And second is, I see it's going to be tough for insurance plus hospital business as a whole, because if you see, insurance requires a massive growth. They're trying to a particular chain which has less market share becomes harder. Second is there are a lot of regulatory issues which might come about consolidation of insurance with a particular hospital. And second, if you see globally also, there is a like benefit of insurance plus the hospital as a industry is not proven across the world. So insurance company doesn't control much power on how the patient should be directed to a particular hospital. So I think it's at very nascent stage, and it needs to be seen how it pans out.
Right. Sumit, from the preferred picks that you have and from the universe that you cover, how do valuations look like? What are your preferred picks when it comes to the valuation bit of things?
So we see Artemis and Yatharth being re-rated, and overall the kind of growth potential that it has, the market will basically they will re-rate it, and overall it's a good potential in these kind of stocks that we have. And apart from this space, if you talk about the mid-cap companies like Max or Medanta, there are some challenges, but I think the overall valuation over the last 1 month that has come down, and it looks favorable.
Sumit, one more question on private hospitals. The share of treatment there is expected to rise around 73% by FY27. I want to understand what are the kind of challenges these hospitals could face, and how will this overall shape up for the entire hospital industry?
So overall private sector, like there are 2 or 3 key factors, like basically the under penetration of the bed density, and second is the rise of insurance penetration that is going on. Third is the medical tourism that we discussed. So basically the challenges that they might face overall of the overall private hospital, that there might be a good amount of competition. Let's say within the Delhi NCR space, there is a lot of majority of the hospitals are coming with a good expansion plan. So there might be some kind of consolidation as well as competition in terms of attracting the volumes. And for some, obviously, there would be some incremental volume. For some, they will see volumes declining. So in the near term, we would see there would be some kind of competition leading to lower volumes and kind of pricing pressure also.
Sumit, any regulatory risks or any policy risks in your view, both with regard to standardization of fees as well as a cap on RPOB? Is there something that you are building in, or one may expect, given the way in which pricing in the healthcare space is playing out?
See, in the hospital industry, regulation risk remains forever. So basically, at any point of time, the regulatory bodies can come. However, if we see post-COVID, there has been an increased focus from the private as well as the government to increase the beds or the overall bed density across the length and breadth of the country. So I see I understand basically in the March when Supreme Court came with that order. So point is, I think it is more of a noise than a kind of material event that might take place. Because suppose if the particular order or some pricing pressure is there, or pricing capping on the prices there, so I would see majority of the private players, let's say they are checking their plans and stopping their overall capex plan. That will have a negative impact on the overall industry as a whole. So I see that might not be material enough as of now, and the capex plan would go on as large.
Right. Well, Sumit, thank you so much for giving us those insights on the entire hospital industry and the pharma space overall. Thank you so much for taking your time and speaking with us at NDTV Profit.